Hello, and thanks for tuning in to Finance Wise, the show that empowers you to make informed decisions about your money. I'm Dante Kostumi Milani, and in today's episode, we'll be discussing saving, investing, and retirement planning for small and medium enterprises. Running your own business brings many challenges and rewards. Once small and medium enterprises advance to the stage where they actually start turning a profit, the entrepreneurs have to consider their options regarding savings, investments, and retirement. Most large corporate employers provide retirement benefits to their employees. However, SMEs need to investigate and select the best investment options for themselves and are often also expected to provide information and advice to their employees. Retirement options are an important topic for everybody, whether formally employed or not. This is because private retirement investment on top of company or state-provided facilities is in most cases necessary in order to retain your standard of living in retirement. Today's episode on saving, investment, and retirement planning for small and medium enterprises is sponsored by the Financial Literacy Initiative. As you know from our previous episodes, the Financial Literacy Initiative was officially launched in March 2012 in order to improve financial education and consumer protection. The FLI was rolled out in the Commerce, Irongo, Northern, Southern, Caprivi, and Kavango regions during 2012. Good business and cash flow management practices eventually lead to small and medium enterprises having the ability to save money on a regular basis. These savings can be categorized into short-term and long-term investments, depending on cash flow and the capital expenditure needs of the business. The entrepreneur also needs to provide for his or her retirement, which is also a form of long-term investment. Now let's see what local individuals and SMEs have to say about saving, investing, and retirement planning.
I hear that if you are working long term and saving, maybe you will come out somebody while you are having any plan.
Name one investment vehicle that you know of.
It's simply like a tax.
What comes into your mind when you think of retirement?
If you are retired, like let me say, especially like sometimes you are working, but you cannot make something. But while you are retired, then you will come out do something else.
In the next training clip, we look at saving, investment, and retirement planning for small and medium enterprises in more detail. Saving is simply income minus consumption or expenses. It is a part of your business income that is not spent after taking care of the essential financial obligations and is therefore available for investment. Investing means putting your money to work for you, using the principle of compound interest, which transforms your business savings into an income-generating tool. The term compounding might sound new to you, but it is simply the process of generating earnings on an asset's reinvested earnings. Later, we will talk about compound interest. This is the process of interest earning interest. Saving and investments can be either short-term or long-term. It is important to establish what you are saving or investing for. Defining your investment goals in advance will assist you in making decisions on where and for how long to invest your money. Retirement is one such investment objective or goal. Retirement is the point where a person stops employment completely and therefore is no longer receiving a regular income or salary from employment. In order to put your retirement plan on track and keep it there, you need to master two basic financial principles. Timing is everything, as it enables compound interest. Retirement is a long-term goal. Whether you are just starting your career or counting down your final years until retirement, one of the key investment allies is the concept of compounding. This is because your interest and profits build on profits automatically. For example, let's say you invest 10,000 Namibian dollars in an investment that pays 8% annual return. You will have 10,800 at the end of 1 year. After 5 years, your 10,000 Namibian dollars will have grown to 14,700 Namibian dollars, 31,700 Namibian dollars after 15 years, and 68,500 Namibian dollars after 25 years, even if you never add another cent to your investment. But don't stop there. Your investment will grow more quickly if you add more money to it year after year. Your main objective in saving for retirement should be to replace your pre-retirement salary in case you are an employee or income in case you are a business owner. Ideally, you want to save enough to replace 60 to 100% of your salary or even more of your pre-retirement income. This is known as your replacement ratio because if you think about it, the real concern with retirement is that you will no longer be earning a monthly income from your job. This is why you need to have saved enough money during your working life to replace what you were earning when you are retired. The higher your replacement ratio, the better. If, for example, your last salary before you retired was 10,000 Namibian dollars per month and you have saved enough money that you can pay yourself 7,000 Namibian dollars per month from an investment that pays out a monthly sum or annuity in your retirement, then your replacement ratio is calculated as 7,000 divided by 10,000, which equals 70%. The higher your replacement ratio, the closer your standard of living in retirement will be to the one you enjoyed while you were employed. There are several investment vehicles available in the Namibian market for SMEs to choose from in investing the money from their enterprises. These vehicles include portfolios made up of cash, money market instruments, bonds, equities, and listed property. In the next training clip, our resident investor Peter shows us some of the options and considerations for SMEs when investing their money. When saving for retirement, it is important to understand that all investing involves some risk. Investing is a trade-off between risk and return or reward. A willingness to take some risk with your money today may provide you with the chance to earn a bigger return in the future. The more time you have to reach your retirement goal, i.e. the younger you are, the more investment risk you can afford to take. Traditionally, younger investors just starting a business will expose their portfolios to more listed company shares. This exposure to shares will reduce to be replaced with bonds and money market investments the closer one gets to normal retirement age. However, remember that even if you retire tomorrow, you don't need all your money tomorrow. And even in retirement, you are still a long-term investor. So you need to keep a portion of your money invested for growth to carry you through a retirement that could last up to 30 years or even more. Think of your oldest living relative and make sure that you save enough to take you through to his or her age. By dividing your retirement savings among several different types of investment vehicles, you are diversifying your risk. This means that you are reducing the risk of being invested in only one type of vehicle that may fluctuate in value at the wrong time. Have you ever heard the saying, "Don't put all your eggs in one basket"? Well, this is exactly the principle that diversification of investments is based on. Your investment choices fall into 4 broad categories: shares or stock, bonds, cash, and listed property. Another option could be physical property in the form of residential homes and commercial property such as office buildings for which one receives rental income. We asked some FLI platform partners to give us their views and advice on saving, investment, and retirement planning for small and medium enterprises. See what they had to say in the next clip.
My name is Afra Shemeng Chase. I'm a financial planner. I operate from Chase & Associates CC, which is a financial planning advisory and financial coaching firm in Windhoek. Our primary focus is on professional women. We're very passionate about financial education, so we spend a lot of time contributing in that specific arena. And considering retirement planning really forms part of your bigger financial portfolio, and as such we provide advice and products with regard to that specific leg as well.
What are some of the different retirement and investment options available to SMEs in the Namibian market?
From an investment perspective, it's extremely broad. There are a huge number and types of investments that would be available to small and medium enterprises. I think it would be beneficial to focus more on the retirement side of things in terms of what's available to small and medium enterprises. And as an organization or as a company, one of the things you could offer to your employees is to become a member of a pension or a provident fund, which is a vehicle through which you can actually contribute towards your retirement, and a portion of your salary is then contributed towards this retirement plan. Then on an individual level, what one would have is you would be able to become a member of a retirement fund, but a retirement annuity fund, which essentially is it's a pension fund as described by the Pension Funds Act. The difference from a pension or a provident fund being that at the end of the day with a retirement annuity, it's your own individual contribution towards retirement. So there's not necessarily an employer-employee relationship. So depending on the size of the business that you have, you would probably create a pension or a provident fund, for which you do need, a certain minimum size of employees. But that's what some smaller companies would do. And if you don't have sufficient, employees for that, you can actually create company retirement annuity plans, where, for example, the retirement annuity is an individual product that belongs to the employee. But at the end of the day, the employer contributes a portion, the employee contributes a portion, and should you leave employment, what would happen is you would then become fully responsible for the contributions towards that product. Over and above that, some of the things that we have is things like unit trust products or investments in shares, etc. Now these products, whilst they are available for retirement planning as well, do not have the advantage of providing the tax deductibility of contributions, whether it is to the employer or to the employees. So in terms of our current law, you can deduct up to 40,000 Namibian dollars annually for your contributions towards retirement funds, company policies, and study policies, as we would call them. So in order to get that benefit, you would actually have to have one of these types of products.
What should consumers be aware of when buying or investing into retirement products?
I think the first key thing is that if you're an employee, in most cases you would be a member of a pension or a provident fund. So very important to have seen the rules of this fund, having gone through them, read those rules to understand exactly what do I become entitled to at retirement, how is my payment made, do I qualify for things like life cover and disability cover as well, because often within a pension fund arrangement you can provide group benefits, which would include, for example, life cover and disability cover at a much cheaper rate than if you got that individually. I think it's very important to have a good understanding of what the tax implications are, what the advantages of investing in a particular retirement product could be. And then, when we're speaking about what do I as an individual need to know when I enter into a relationship with a financial advisor in terms of, taking out a retirement product, I think key is also that there's a relationship of mutual respect between the two of you, and that one can really, share what your financial goals are. Be aware of what the cost factors involved are in the investment. As we know, no investment is free. So there are costs involved. I think it's also extremely important to understand what are the risks involved in taking out a particular product.
What are the main types of retirement products the average person should consider and understand before making decisions about where to invest their retirement savings?
Pension funds, where you have an employer-employee relationship, that's the prerequisite for that type of fund. Provident fund, same thing. Retirement annuity products, which is basically an individual insurance policy of which the underlying investments could be different types of unit trusts, or it could be portfolios within an insurance company, some of which carry guarantees, some of which don't. Things like property. Property often forms part of a retirement portfolio. What else is there? So those are basically the types of products where you could put your retirement savings. When you look at a pension fund or a provident fund, should you resign or terminate your employment with that employer, you become entitled to that accumulated credit, so whatever you've got in that pension or provident fund. And a lot of people tend to take those monies. They are liable for tax on those monies, but they tend to use those monies either to go and pay off debt at that point, or whilst they're waiting for the next employment, that's how they manage to cover their expenses. That's something we really do not advise, because at the end of the day, what you end up with is that you are eating into the retirement money that's actually meant to fulfill your retirement plan. So all those contributions that you've made towards retirement fall away, and you're starting from scratch with your new employment. That is not something that is an issue when you have a look at a retirement annuity policy, because that one, once you become a member, you stay a member until you are at least age 55. In other words, you retire. Or if you become disabled earlier than that point, that's when you can take access to these funds. In the case of pension funds and retirement annuity funds, at retirement you get your 1/3 tax-free and in cash. Your 2/3 you use to purchase what we call a compulsory annuity. So that's like a pension that pays you for the rest of your life. With a provident fund, at retirement you get that total accumulated credit in cash. So your 1/3 is still tax-free, your 2/3 is still taxable, but you're getting all the monies, and it's basically up to you to go and plan what you're going to do with your finances.
What should entrepreneurs be aware of as far as retirement is concerned?
I think one of the big things about entrepreneurs is they go out there and they make huge plans, and they really run their businesses and put all their energy into that. And I think initially what they also do is they tend to put all the monies back into the business, and they tend to forget about themselves. So I think something that's key for them is to actually be clear from the word go that their retirement planning is extremely important, and that from when they start their businesses, they should be contributing towards their retirement, however they choose to do that. In some cases, of course, it really makes sense to have a look at what the tax advantages are, especially when you're running your own business. But it's really key to put something away. I know that initially when we start businesses, we're concerned about cash flow, we're concerned about keeping the business going. But it's important to have a balance in our thinking in terms of what's important now and what's important over the long term. So I think for entrepreneurs, even more important to put away something for retirement, to ensure that there are contributions that will actually, be there when they retire. Because the unlucky thing is that if you don't plan for your retirement, you end up at retirement not having the funds available that you require, being dependent either on family members or on the state for certain payments, and being unable to actually enjoy the lifestyle that you've worked so hard to actually get.
We also talked to some local SMEs to get their views and experiences with regards to saving, investment, and retirement planning.
My name is Paul Mwamba. I am the CEO of Asante Sana Enterprise at Junior Achievement, and I just matriculated this year.
What type of business are you involved in?
We are involved in 3 major sectors. We do marketing and advertising for small SMEs. We also do printing of T-shirts and documents for companies, and we also do craft work for tourism.
What financial challenges did you face while running your business?
Well, we faced a few. The first one was lack of experience how to manage finance in the business, and most of the managers in the company were not familiarized to the whole financial concept.
How have you overcome some of those challenges?
Well, we rotated some management. We shifted the finance manager and placed her at another position just to see if the other person is better. And yes, it actually helped.
Where do you seek advice about financial and money matters?
Whenever we are having finance problems, we run to the Junior Achievement, because they are the ones that introduced us to the whole financing and marketing problems and how to sort it out. So we normally come to them for advice, and they've been quite of help.
Do you think there are enough facilities in Namibia to assist young people with financial education?
Well, I don't think so, because in our communities we see a lot of young people with great ideas, with great businesses, but they keep on going down the drain because of finance, and they lack finance education, and they are not familiarized to the whole financial concept. So I don't really think so.
Now that you have some first-hand information, you can get started on saving, investment, and retirement planning for yourself and your business. Remember that there is no time like the present to start improving your financial prospects for your future. I've mentioned earlier that this episode is supported by the National Financial Literacy Initiative. The FLI has developed several street theaters which give tips on saving, budgeting, and spending in a very entertaining but still educating way. For additional information on the initiative or on saving, you can fetch one of these FLI booklets or posters at the Ministry of Finance in Windhoek, or download the FLI booklet on the website below. Please remember that the points made in this program are not meant to give you personal advice. There is no one-size-fits-all approach to saving. The point of this program is to give you a more tangible look at how a business person or individual might implement the ideas discussed. There are many other alternatives out there, and we strongly encourage you to explore them and see what works best for you. Whatever you do, keep the principles we've discussed in mind and never stop trying to learn more. This is Dantakos Jimmy Malani, encouraging you to get finance wise. See you next time. Bye.